Good evening, ladies and gentlemen. I got a question to ask you. If I could show you a way to trade that has an 80% probability and a 4-to-1 reward to risk ratio, would you be interested? The other question is, if I could show you where you can see this all the time, and you can get at minimum 2 trades a day, maximum up to 6 or 7 trades a day, would you be willing to listen to me? If so, go take a look at what I'm about to show you here. Um, I trade something called price flow analysis. Okay. And in price flow analysis, the only thing that I do is I look at price flow from the larger time frame down to the smaller time frame. And then I look for reversals, specifically ABC reversals, to go in a direction, back in the direction of the trend. You'll see here on Friday, we had Friday the 29th, as a matter of fact, we had 2 trades, and I'm going to talk about a couple of more besides these two, but we had 2 trades here. And as you can see, momentum is headed down here after a lower high on the 8100 here. And as it's going down, we see where I have it highlighted here on the 2700, where price then tries to go up. And then on the 900, it gave you what we call a market structure to go up. And then it gave us a double top ABC pattern where it went up, down, and it went up and double top. Then what I'm doing is when price closes below where I have that white horizontal line, at about 1036 on the 300, I'm entering that trade. That trade would have from a 76, 17076, 17, your actual entry would have been, honestly, would have been 17074 and a quarter with a stop of about 81. So let's just say 7 points of risk. And let's see what this trade would have done for you. So you're in at 74. That's your entry. Then here, we've stayed in this trade until over here. We would have got all of that, right? And then we would have been out of the trade right about there. So it went from 74 to about 25 with, and I take that back, you would have got out at about 28. So you went from 74 to 28 with about 7 points of risk and about almost 50 points of profit, right? In addition to that, we had another trade set up to happen. And if you look on the 8100, which is the chart closest to your, on the left-hand side, farthest chart on the left, you got another pullback, lower high, comes down. Price then on the 2700 gives you a fake up bar. And as you can see, when it does that, it gives us a market structure on the 900. And then it gives us what we love to see, which is the ABC pattern on the 300. Once price closes below that horizontal line, I know for a fact that that has a higher probability of winning. So my entry is 96. My stop is about 03. So you're talking about another 7 points of risk, and let's see what this trade did. You'd be exiting for sure at about right here. So from about 96 to 57. Okay. So another 7 point risk with almost about 40 points of target there, right? You can't catch the bottom and you can't catch the absolute top. What we're trying to do is get the middle, the meat of the situation, and that's what we try to do. In this particular case, it went up a little bit and then it came crashing back down. And then that was it. So then this is the last 2 trades I'll talk about for today. You had your trade here, where again, you have a higher low. Then you have momentum going up. Then you have a market structure. And then once you get to market structure, you're looking for an ABC pattern to affirm that said market structure. You got it here. So once price closes above the white line on my 300, which is the chart farthest to the right-hand side, I'm going to be entering that trade, and that'll be right there at 93 with a stop of 88. So you have 5 points of risk. And that chart trade went approximately, you got in at 96. You got in at 93, excuse me. You got in at 93. And honestly, you would have been out at about 16. So you had 5 points of risk with 96 to 16, which is about 20 points of profit target there. And then it did the same thing for you here. And I want to show this because this is a real live example of how we trade over here in the trading room. And then you get the same thing here. You got momentum up. You got a market structure pullback here. And then you have your 2B. So when price closes above this line here, close above this line, now I'm looking for an entry. So here's my entry at 22.50. My stop at 13.12.50. So talking about 10 points, right? So let's see how far this goes. This is not the best. This trade didn't work out as good as the other ones did. So you got in at 22, and you would have been getting out at about 27. So you've not made that much money on that trade, but that is that second move. And that's what we trade, ladies and gentlemen. We trade price flow analysis using momentum, trend, and timing to get into the trades. We've been doing this for 25 years plus. That's how we trade. If you want to know more, please check out the other videos that I've had. How to read the markets, how to read the stock market is part 1 and part 2. I haven't done part 3. I'll be doing part 3 next week. And I would love for you to take a look at it. And then I'm going to bring it all together in the last of the part 3. I'm going to do my last part, which is part 3. But that's how we trade. And we'll be live in 2024 trying to show individuals how they can capitalize on the markets, no matter be it stocks, options, futures. The market has a footprint. And once you know what that footprint is, you can be profitable. With that said, ladies and gentlemen, Happy New Year. See you on the side. Bye-bye.